my sessions. So it's a session that has got a period. It's basically a plan that will take us for about 4 months. Okay, it's a 4 months program. That's basically what we're going to do. So I have designed this spreadsheet, which will basically give you an overview of what we are going to look at and how we are going to look at it. Okay, like for instance, for today, our first session, we'll have to look at the real purpose of accounting and Excel setup for accountants. Okay, and we also need to ensure that we understand things like double entry and the accounting equation, because if you want to use Excel for accounting purposes, you need to know accounting. Okay, if you want to use Excel for accounting purposes, you need to understand not just accounting, you need to understand, at least you need to understand basic accounting, and then you relate the basic accounting to Excel. Okay, so the way this program is going to be, okay, so the way this program is going to be is that we'll look at a number of things. There'll be a focus on Excel, a focus on Pastel, a focus on taxes, statutory payments, and company setup. Okay, a company setup approach. Basically, how to register a company, everything that you need. Basically, that's how we are going to look at everything. All the sessions will be recorded, just like this one. This one is being recorded, and all the other sessions, all the sessions that we have will be recorded as well. And there's also a Pastel version. I know, Mr. Knox. Now we have a Pastel version. We have a Pastel, Sage Pastel version 5.2, which if you were to register and then you give me your email address, I can manage to send you the installation files, and then I'll give you the codes as well, so that you manage to set it up on your computer.
Oh yeah,
Yeah.
no, that's awesome. Thanks for that. Sure.
Yeah. So I actually have it right here with the codes. I have everything readily available. Whenever someone registers and then they need the pastel, I'll be more than happy to actually give them. I know back then when we were doing the pastel lessons, we didn't really have the pastel, but now we have the pastel. We also have QuickBooks. We have QuickBooks. We have pastel as well. Okay, so let us quickly cruise through this document. All right, so the total number of sessions that we will have actually 48. That's for the entire period. Okay, that's for everything. Excel, Pastel, taxes, statutory payments, or company setup approach. For everything, it's 48 sessions, 3 sessions per week. Okay, that's how we're going to do it. So I'll share this document with you. This document shows what we look at in each session, and it tells you what you're supposed to do as well, and what we are supposed to know. Basically, our objective every single time we have a session, our objective. And I will need you guys to be very active and also very productive. Like, we need to practice a lot. Certain times I'll need you to probably make a certain Excel spreadsheet, or I'll need you to do something on Pastel, or I'll need a bit of practice from you. It shouldn't just be theory, it shouldn't just be me talking, but it should be me watching you, or me looking at your assignment sometimes and me showing you what to do, and then afterwards you practice it. Okay? All right. So basically, this shows everything that we'll do for all the 4 months. This is set up, and the first session is today. Okay, this shows everything that we do for all the 4 months. Okay, so what we are basically doing is combining Excel, Pastel, as understanding taxes, understanding accounting, understanding statutory payments, ensuring that everything that we do in our workplaces or in our businesses is actually very, very effective, and it's done properly. Okay, so let's just concentrate on today's session, the first session, today's session. Today's session is basically in the first week. Our objective for the first week is understanding the foundations in accounting and basically understanding Excel. Okay, understanding how Excel works and understanding how we can relate Excel to accounting. Okay, so what we are supposed to look at is why accounting is essential in every business, understanding the accounting equation, the assets equals liabilities plus equity, and us creating our first accounting spreadsheet. By the end of this week, the plan is by the end of this week, we are supposed to be in a position to create a simple accounting spreadsheet. All of us, I'm not just talking about myself, I'm talking about all of us. Mr. Oscar, you're supposed to be in a position to create an accounting Excel spreadsheet by the end of this week, Mr. Knox and everyone else. That's basically how it's going to be. Okay, that's our objective for this week. All right. We'll start with an empty sheet. Okay, we'll start with an empty sheet. This is an empty Excel sheet. Okay, and this actually looks as a small sheet. It practically looks as though you probably won't do anything. But there's something that I've noticed about Excel. Excel actually makes your work way easy. Okay, it's practically like magic, and it can do a lot of things that we don't know about. Okay, because basically what we are going to look at is basically accounting in Excel, or basically look at Excel relating into accounting. But it can actually even do way more. It can actually do even way more than we can think of. I have a question. Why do you think businesses keep records? Mr. Oscar, why do you think businesses keep records?
I think business keep records for future references.
Okay, yeah, that's actually very correct. Mr. Knox, why do you think businesses keep records?
Okay, yeah, thank you for that question, Mr. Ronald. So there are a number of reasons to why businesses keep records, and one of the reasons is a business can only tell on how much they have been performing in terms of profit when they have proper records in place. Then also, these same records that businesses keep, they are the ones that at the end of the day, during the period of preparing financials, they are the same source documents that we use to get information on how much we have spent on purchases, how much we have spent on payments, and so forth. So basically, these records help us so much in businesses to be able to produce financial statements.
Yes, that's actually very correct. So, yeah, that's one of the reasons why we actually keep records. Madam Musonda, would you like to say something? Why do businesses keep records? Okay, all right. So all the answers that you've actually given me are very correct. They are very, very correct. Okay, but the other answers that we can think of are things like accountability. Okay, decision making. Like for instance, let me just give you an example. Imagine you're working in some company as an accountant, and you're actually the management accountant of that company. Okay, you're actually the management of a management accountant of that company. So basically, your management actually relies on you to give them financial information and non-financial information to aid them in their decision-making prospects. Okay, they want to make proper decisions and they want the information to come from you. So basically, you have to ensure you have a proper record system of which you can do a physical one. Like for instance, uh, you have box files, and then you have a payments record, the revenue records, and you have a number of records. Or you can have one online. You can have one online, or you can have one on basically on your computer, because nowadays it's actually very easy. Like for instance, I'll give you an example. I can have a record just on Excel on my computer. It's okay, it's safe, but the computer might crash. I might have the same record online again. I know there's a high chance I won't lose the online one. So imagine I have a physical one, a physical copy. I have one on Excel that I've saved on my computer, and I have one online. Okay, between the three, which one do you think actually works the best? Doing your record keeping, you're having physical copies of your documents. For instance, let's just imagine there are payments documents, having physical documents of your PVs, having physical documents of your invoices and the receipts and everything else, or having records via Excel just on your computer, or having the records online. Which one do you think is the most effective, like the best option? Okay. Me, I would say the online one is the best. The physical one is okay. It's actually I prefer having physical ones and online ones than on my computer. My computer might crash. Okay, I might lose everything, but it's actually good to have everything on my computer. But there's also a system where you can actually put whatever you're doing online and edit it online. Okay, and having a physical copy, you have it. So there's a high chance that you won't really lose it because you have the copy. Okay. All right. So the main reasons why businesses actually keep records, we can talk about accountability, we can talk about decision making, and the other reason is basically legal compliance. Like for instance, if we talk about businesses like public limited liability companies, they need to basically publish their financial statements, right? Every single year, they have to publish their financial statements. So it's a legal requirement for them to actually do that. So for them to ensure that they publish proper, correct financial statements, they have to ensure that their record keeping was also 100% correct. Their record keeping was also 100% okay. Okay, so there's also a legal compliance and also the business growth. If you want your business to grow, if you want your business let me repeat this, if you want your business to grow, then you have to ensure that your record keeping is actually in place, your record keeping is proper, and Excel is a tool that you can actually use to make sure that your record keeping is very, very correct and done properly. Okay, so now that we understand why we actually keep records, okay, why businesses or accountants, small business owners or large entities actually keep records. Now let us basically understand what accounting is. Because I said for you to effectively make a proper spreadsheet, an accounting spreadsheet, you have to understand what accounting is. And I know we are all accountants, but even the basics can work. You just understanding the double entry, you are just understanding the accounting equation, then you'll be in a very good position to actually make one. Because if you want to make a proper accounting equation, a proper accounting spreadsheet, yeah, you can make a sales report, which is easy. You can make a revenue report, which is also easy. But if you want to make a proper accounting you want to make a proper accounting spreadsheet, then you probably need to know accounting style. You need to know how to account for certain financial elements so that you account for them in a proper way. Okay? All right. So let's just talk about accounting. There's something that I like saying about accounting. I call accounting the language of business. Okay? The language of business. So basically, accounting is, let me say, a communication style. The way we communicate our financial elements with other people. These other people are basically stakeholders. Stakeholders, we can talk about internal stakeholders like management, or external stakeholders like, for instance, the government or ZRIA for tax purposes. We are basically communicating our finances to stakeholders, business owners, investors, uh, the ZRA, the NEMA, the NAPSAs, or the banks if you want to get a loan. So basically, this is my personal opinion. Okay, this is my personal opinion. Without accounting, a business is blind. Okay, and accounting, I'm also talking about bookkeeping. Without accounting, a business is blind because you will have no idea what's happening in your business. If you don't do record keeping, if you don't do your accounting, then you have no idea what's happening in your business in terms of finances. That means you are blind to your business. Okay, so without accounting, a business is blind. Okay, so I know we are probably familiar with accounting equations, apart from accounting equations, financial statements, documents like, for instance, sales reports, creditors reports, uh, a number of reports that you need to make as an accountant. Okay, because as an accountant you probably need to, and also budgets. Yeah, budgets, you can make them in two types. You're probably familiar with cash flow budgets or income statement budgets, or we can talk about you wanting to actually have a financial statement, like you want to have a balance sheet via Excel, or you want to have an income statement via Excel, or basically you're running a small business and you want to make sure that your accounting is done properly, your bookkeeping is done properly, and everything is in place, and you want to make sure that your record keeping is done in a very, very good way, then yes, you have to learn this. Okay, all right. So I said, I said, I said accounting is the language of business, right? And I also said without accounting, without bookkeeping, you are blind to the business. Or basically, I also said without accounting, a business is blind because it can't really see its finances, right? Okay. Do you all agree with me that without accounting, a business is blind?
Yes.
Okay. Yeah. Why do you think so? Why do you agree with me that without accounting, a business is very blind? They can't see anything.
I don't know how to put it in words on the spot.
Okay.
Okay, maybe just to add on, I think the other reason is from the same accounting where we tell how the business is performing. Is the business making loss? Is the business making profit? So without accounting, you can't tell. That's why you are putting it as business is blind without accounting, because you can't tell its position without accounting. That's my opinion.
Yeah, that's actually correct because if let me just, I'm imagining myself. If I'm running a business, and I don't know how many sales I made because I don't do any record keeping. Instead, when people give me money, I just get the money and spend it. I don't keep a record of all my expenses. I don't keep a record of all my incomes. So basically, I want to know how much money I've actually made. Okay, so that makes me blind. That makes my business blind because uh, I won't be able to know how much profit. I won't be able to know how much I'm spending on expenses or how much my total revenue is. So yes, the phrase without accounting, a business is blind is very, very correct, and that's the way it is. Okay, so the other thing that we have to ensure we know before we actually make a very proper spreadsheet, a very good spreadsheet, I said we have to understand financial accounting. We have to basically understand the basics of accounting. The other thing that we have to know is basically the accounting equation. And it's not like, don't worry, I won't give you tests or exams on this. I won't do that. I do that in my financial accounting lessons, but not in this one because this is focused on us learning practical accounting. And this is the knowledge that we're supposed to have when we are basically doing our reports or making our spreadsheets. So we need to understand the accounting equation. And apart from the accounting equation, we need to understand the financial elements because if you want to make a financial spreadsheet, then you need to know financial elements because financial elements are elements that you need to actually input in that particular spreadsheet. I'll give you an example. Imagine, can you make a spreadsheet about sales when you don't know what a sale is? You don't know how to account for a sale in an income statement. You don't know how to account for expenses. Yeah, for instance, you don't know how to account for cost of sales in a financial statement, in an income statement. Can you make an income statement? No, because you might know Excel, but you don't know accounting. So basically, we need both. We just don't need one. We need accounting and Excel. So we get accounting, we get the basics of accounting, link it to Excel to make a proper accounting spreadsheet. Like I said, by the end of this week, I'll need everyone to be able to make at least a simple spreadsheet, a simple Excel spreadsheet by the end of this week's 3 sessions. That's the objective, that's the goal for this particular week, as per our plan, 48 sessions. All right, so we need to understand the accounting equation. By understanding the accounting equation, it's not just understanding the formula. Like for instance, we say, oh, the accounting equation is assets is equals to liabilities plus equity. Yeah, we know the formula, which is good, which is correct. We know the formula. The formula is assets is equals to liabilities plus equity. Okay, but if I were to tell you that this is a balance sheet, I don't know if you agree, but this is a balance sheet. So apart from understanding the layout of the accounting equation, you need to understand what an asset is, what a liability is, what equity is, and the types. Okay, and then when you understand all that, you need to understand why. Like, I'll give you an example. Why are we adding liabilities and equity? Right? Okay, let me ask you this question. Let me just ask this general question. The accounting equation is assets is equals to liabilities plus equity, which is correct, okay? Which is correct. Assets is equals to liabilities plus equity. But why do you think the accounting equation is like this? I know it's a random question, okay? Maybe you've never thought about it. But why do you think the accounting equation is like this? Anyone? So, okay, let me tell you why it's like this. Imagine you want to start a business, you have money, or maybe you want to start a business and you only have about 10,000 kwacha. And the business that you want to start actually needs capital of about maybe 25,000 kwacha. So you need a 15,000 kwacha extra. So what will happen is you have capital of 10,000 kwacha. That's the money that you have in your pocket. Okay, you have 10,000 kwacha as the money that you have in your pocket. But the business that you want to start actually costs 25,000 kwacha. So you need to borrow some money, okay, of 50,000 kwacha. Okay, you need to borrow some money of 50,000 kwacha. And when you borrow this money, you borrow money worth 50,000 kwacha, and the total will be the 25,000 kwacha. Okay, but do you know what you're going to use the 25,000 kwacha for? You're going to use the entire 25,000 kwacha to acquire assets. Am I correct? See, I'm actually hoping someone would say something. You're going to use the entire 25,000 kwacha to acquire assets. Madam Sonda, would you use the entire 25,000 kwacha to acquire assets? You have capital 10, and then you get a loan of 15,000 kwacha. Would you use the entire 25,000 kwacha to acquire assets?
I want to say no.
Okay.
Please don't ask why.
Okay, let me ask for everyone's opinion. Mr. Knox, would you use the entire 25,000 kwacha to acquire assets?
Oh, yes.
No.
Yes. No.
Oh, Mr. Madam Sonda, you changed. You said yes.
Yes.
Okay, all right. I was about to ask why, but I got the memo. First one.
Thank
Okay.
you. Can I please
Mr.
hear from Mr. Knox?
Okay, Mr. Knox.
Yeah. So I wouldn't use the whole 25,000.
Okay.
Yeah.
Okay. Anyone else? Mr. Caleb. Hello, Mr. Stumbeko. Would you like to say something? Would you use the entire 25,000 kwacha to acquire assets?
No, I wouldn't use the whole amount to acquire assets because there are
Oh,
also other things which are needed to be used.
okay. All right. Does anyone else want to add on? Before I also, by the way, it's also my opinion. Before I add my opinion as well, and then you judge me from the opinion I'll give you. You can even ask me. Yes.
Okay, so I want to say I'm saying yes because at the end of the day, we must uphold the fundamental accounting equation, which is the assets is equal to liabilities and equity.
Okay. All right. Okay. All right. So that's very, very good. I'm thanking everyone for their opinions. Okay. All right. Every business actually uses or let me just give you an example. We have capital of 10,000 kwacha, and we get a loan from the bank of 15,000 kwacha. Definitely, we are going to use the entire 25,000 kwacha to acquire assets. That's what we're going to do. Firstly, we are probably going to buy inventory, our stock, right? Which is an asset, a current asset. We'll probably need to buy maybe computers or machinery if we want to produce something, which is our non-current asset. And we'll probably, if we have spent a lot of money, like, okay, we need some money in our bank, we'll have cash in bank or in hand, which is also an asset. So we actually use the entire amount to acquire assets. That's the reason why in a balance sheet, capital plus equity, capital plus liability is always the same as assets. Okay, so we are going to use the entire amount, we get a loan from the bank, and we get a bit of some money or pocket money that we had, and then we decide to start a business, we are going to use the entire amount to acquire assets in that business. Assets like cash in hand, cash in bank, stock that we want to sell, machinery that we want to use in our business, or computers. Yes, that's the reason why assets are always the same as liabilities plus equity. And basically that is the accounting equation. So the accounting equation is basically a phrase that says when you get a loan from the bank and you have some money in your pocket, you're going to use your entire amount to get assets. And if you don't use the entire amount to get assets, it means that amount is not really for the business because you haven't used it for the business. You probably use it for something else. And if it has remained, meaning it's cash in bank for the business, if it's in your hand, then it will be a drawing. Okay, all right. So basically, the reason why I'm saying this is because we need to understand the accounting equation for us to come up with a proper balance sheet, and we need to understand another equation. Like for instance, if you need profit, if you want profit for your business, you want to know how much money you've made for your business. The simple thing that I'll use the simple terms, and I won't use revenue. I'll use sales. The simple thing that we do is sales minus expenses, which will give us our profit. Or instead, I can say incomes. Incomes minus expenses, which will give us our profit. Let me give you an example. There's this thing that I made. Okay, so there's this that I made. This is the cash flow here. Okay, so the income statement is right here. So this is a simple income statement. Okay, I've noticed that this is more supposed to make it a little different. Okay, just imagine we have sales. I'll just give the credit sales. So just imagine we have sales on top. We have credit sales, and that's our incomes. And we have other incomes, like for instance, receipts from MD. Maybe it's some form of arrangement that we have whereby the MD is putting in money in the business, or yeah, it will be an income. And then we have expenses. So here we just have incomes, and then we have expenses, and then it's giving us our net profit at the bottom. And then also managed to make a simple cash flow, okay? A simple cash flow using Excel. And yes, you might think, oh, it's complicated. You probably think, oh, Excel is complicated. This is very hard to do. This is not very hard to do. It's something that you can do. It's something that you can do. You can do easily. It will just need a bit of practice and a bit of time. That's the main reason why I said for us to succeed, for us, there's something that I want to make this a huge success. For us to ensure that this is a huge success, we'll have to put in a lot of effort. I'll put in my personal effort as well, but I'll need efforts from everyone else as well. Okay, that's practical effort. Making spreadsheets, like this week's objective is make a spreadsheet. So we'll actually make a spreadsheet. Okay, so this will actually cruise through. I just need to change some information. I noticed there's some my personal data in there that I'll need to change. Okay. All right. Otherwise, it's the same. Otherwise, it's the same. It's the same spreadsheet. It's the same spreadsheet that I presented. The same spreadsheet, the keeping spreadsheet that's actually on my YouTube channel. Okay, there's the book spreadsheet that's okay. So if we understand the accounting equation, how about we try to make a mini balance sheet? What do you think? Is everyone okay with us making a mini balance sheet using the accounting equation knowledge that we've gotten, that we know? Hello, is everyone okay with us making a mini balance sheet?
Yes.
Okay, let me do just that.
Yes, please.
All right, let me do just that. Okay, so I'll make up a transaction. Okay, I'll make up a transaction, and I'll do the transaction. By the way, my name is Ronald Kashweka, in case you don't know me. Okay, so let's say if Ronald, let me just type it, hopefully I'm quick. If Ronald invests, if Ronald invests 10,000, if Ronald invests 10,000 in his business, if Ronald invests 10,000 in his business, the assets will be equal to, we'll have the 10,000, we'll have the 10,000, and our equity will be the same 10,000, because I've invested a 10,000 portion in my business and it's coming from me. It's not really a loan. So both my equity and assets will be 10,000. Okay. And then imagine this: if the business borrows, if the business borrows 5,000 portion from, let's say, from the bank, I need some extra cash and I don't have the money. So I come to Mr. Knox. I'm like, Mr. Knox, I need 5,000 kwacha. Mr. Knox, can you give me?
Yes, as with
Okay,
interest.
okay. Oh, okay. With interest.
Yes, bank interest. It has to appear in your income statement.
Oh, okay. Okay. From a friend. Okay. Let me say a friend. Let me just rephrase the English. Okay, so if Ronald invests 10,000 kwacha in his business, assets 10,000 kwacha, equity will also be 10,000 kwacha, and then if the business borrows 5,000 kwacha from a friend, then how will our mini balance sheet look like? So our balance sheet, let's see, we have let's see, we invest 10,000 kwacha, so we already have capital. Okay, so basically here we have share capital, because okay, let me put it like this: we invest, because we invest 10,000 kwacha, we have 10,000 as equity, and 10,000, the equity will be actually share capital. Because in terms of equity, we have two types: we have equity share capital, and we also have retained earnings. Yes, retained earnings is also equity. Retained earnings represents profits for the previous year that we've decided to bring to the current year, and share capital represents the owner's share of the business, basically the amount of money that I've decided to put in my business. That's the share capital. Okay, so that's how it's going to be. So my share capital here will be 10,000. And then the other thing that I'll have here is I'll have a liability. I'll have a liability of I'll have a liability of, let's say, 5,000, because I got 5,000 from a friend. So I have 5,000 as a liability. Okay. What else do I need? So I have share capital of 10,000. I have a liability of 5,000. So basically, I have my total equity and liabilities. Okay. So now, what I need are my assets. Okay. So imagine using this money, I got furniture. I got furniture for the office of about 3,000 kwacha. Of about 3,000 kwacha. We got furniture for the office of about 3,000 kwacha. And then we got stock because we want to sell it. Our business is in retailing. So we buy stock and we sell it. Like, for instance, I'm in Livingston. Let's say I buy stock, or I don't know what you guys sell in Lusaka. I buy stuff from Lusaka and then we sell it in Livingston, or I order stuff from Botswana or Zimbabwe since they're close by, and then I sell everything in Livingston. That'll be my stock. I buy stock worth 8,000 kwacha. Okay. And then I have cash in bank, as in the money that the money that I still have in the bank, the money that I don't want to utilize because I want my business to have a stable cash flow. And yes, we'll look at cash flow analysis, how to make a budgeted cash flow, and why it's important to actually have a cash flow movement system in your business. And yes, I already have formats for those. And after we look at them, I'll be able to share them with you. It's very important to monitor your business's liquid resources to ensure that your business doesn't go bankrupt. Okay, don't worry, we'll get at that point. We have 4 months to actually do all that. Okay, so if we get if we spend 3,000 kwacha on furniture, inventory 8,000 kwacha, how much are we going to remain with to spend on how much are we going to remain with to spend on our cash in bank? Because it will be, let's see, sorry, I just want to, that's 8,000 kwacha plus the 3,000 and then minus the 15,000. So we'll have 4,000. So I'll just put my 4,000 here because I have 4,000 extra. Okay, now imagine you're supposed to put this in form of a balance sheet and you need to make a simple balance sheet by Excel. How are you going to do it? Obviously, you have to make sure your Excel sheet looks proper, looks nice. And if you don't want it on this particular sheet, you can click here to have an extra sheet for your balance sheet. Okay, just like I did with my bookkeeping spreadsheet. But because it's just a simple example and they're not really making a proper, like 100% proper spreadsheet, instead we're focusing on the accounting equation, I'll just do it right here. And because this is where we have our information from. Okay, so firstly, we'll need a proper title. That's the reason why I said we need to follow standards. We need to follow accounting standards. If you want your spreadsheet or your financial statement to be accepted by the relevant authorities, or basically anyone who actually look at it, you have to make sure that you prepare your financial statement, even if it's by Excel, you need to do it following the standards. Like, what do the international accounting standards tell us about the presentation of financial statements? Because we have International Accounting Standard number 1, which talks about presentation of financial statements. So we have to ensure we follow that particular international accounting standard when we are presenting this financial statement. And see, I know you probably might be thinking, no, I don't know what it talks about. I don't know what it says. But believe me, you know, because it's something that you've been doing. It's more like you've been doing something for years and you don't know that that's what it tells us to do. That's the reason why I always tell people to ask why. Like, why are we subtracting cost of sales? Why are we adding other incomes? Because if we get to understand the whys, then we'll get to relate them to the accounting standards and we'll get to understand why they created those particular accounting standards in the first place. Okay, so we need a proper title. Okay, that particular title for our financial, even if it's by Excel, bear in mind that, and also it has to be in a printable format. So in case you need to print it for your management. So bear in mind that this is a financial statement, not for you only, but for stakeholders. Okay, it might be for you, but if imagine you're in a business setup that doesn't have Pastel, you need a proper financial statement. So the title, we need 3 things, just 3 good things, 3 proper things. That's the title, the name of the business, the name of the financial statement, and the period. The name of the business, the name of the financial statement, and the period. So we'll look at things like, for instance, I can say RK Solutions. And then I say statement of profit. This is the balance sheet, by the way. I don't know why I like the income statement very much. Balance sheet. Balance sheet for the year ended, let's say last year, let's say December 2024. And also it has to be proper. You need to include the day as well. This is me doing shortcuts. Apologies for that. December. Yeah, it has to be like this. Like RK Solutions RK Solutions Limited's balance sheet for the year ended 31 December 2024. We have 3 things here. We have the name of the business, the name of the financial statement, and the period where it relates to. This particular financial statement is for last year. So because this particular financial statement is for last year, so we put it for last year. Okay, all right, that's perfect. So now the next thing that we're going to do following the accounting equation is, we know we need non-current assets first. Okay, yeah, yeah, I know it's a balance sheet that you're doing on Excel, but it's as important as the one that you do on Pastel. And see, trust me, Excel can actually work as Pastel, because I can tell you something. the Excel sheet that I made, the bookkeeping spreadsheet that I made, actually almost works as Pastel. I know it doesn't have the payroll, it doesn't have the balance sheet, but it does. It has cash flow, it does cash flow management. It monitors your credit sales, your prices, and it's automated, so it works as Pastel. Okay, it makes your work easier, and also it makes sure you don't really make any errors. Okay, so it's possible to make Excel work as Pastel. You're not. It's not a must that you're supposed to have an accounting software. You can improvise and make something that works for you. Okay, if your business at that time can't afford Pastel because it's expensive, you can use Excel to give the same results to your management. All right, so we'll have non-current assets here. The same procedure, the same format, because we are following the same international accounting standard. So have non-current assets here. We have the title, where we have the title, which has the business name, the financial statement name, and the period in which it relates to. Now we'll bring in the non-current assets. We'll bring in the non-current assets. The non-current assets, for instance, we have our furniture. So just a furniture here. I'll just say furniture here, and I'll bring my furniture here. I'll say my furniture are worth 3,000. Let me just change this to valuation. I want to change everything to monetary terms. So I have 3,000 kwacha here as my furniture. And these are my non-current assets. Okay? These are my non-current assets. And I want to make sure my balance sheet is proper. So what else do I need? I'll probably need my current assets. My current assets. So my current assets, sorry, I have to take you back. Uh, okay, so my current assets, we have inventory. We have inventory. My current assets, we have inventory. Inventory is 8,000, so I'll put 8,000 here. And cash in bank, so we have cash in bank. My cash in bank is 4,000. Okay, and then I get my total assets. There's one format that I like, and one format that I've seen many people use via Excel. They usually put their totals here. Like for instance, I might sum up everything here. I sum up. Okay, I can sum up all this, and then I have 15,000 kwacha here, and then I'll just put my total here. Okay, as my total assets. Let me just make this a little bit bigger because it seems to be small. Okay, I have my total assets here, and I just bring in my liabilities and equity. My liabilities and equity. My liabilities and equity. Then on the liabilities and equity, I'll put in my equity first. We always start with equity. It's as per the standard. Like I said, we are preparing this as per presentation of financial statements. We always start with equity, and then when we bring equity here, our equity, we only have one equity. We don't have retained earnings because this is when we are starting business. We only have share capital. So I'll bring in share capital here. Okay, I'll bring in share capital here, and my share capital is 10,000. Okay, my share capital is 10,000. I noticed I didn't put the currency here. And then I'll bring in my liabilities. I'll bring in my liabilities. Okay, bring in my liabilities. And my liabilities, I only have one loan that I got through the bank, and it's actually a non-current liability. Because looking at my business, it's a small business. For me to actually get 50, it's 5,000. Okay, let's say it's a current liability. Or let me just make it. Okay, let me make it a current liability. Let's say it's a current liability because I just needed small cash and I can pay it this year. So the current liability that I've gotten a loan from a friend is 5,000. Okay, I sum it up, and then I have my total liabilities because I only have one current liability, and I've share capital here as my total equity, and then I bring in equity and liability. I bring in equity and liability, And if I were to sum these two, it will give me 15,000 kwacha again. Okay, it's giving me 15,000 kwacha. So I get this 15,000 kwacha, I put it right here. So now I have this figure, okay, and this. So now I have, let me ask you this question. Do you think I have a balance sheet? Hello? Do you think I have a very simple balance sheet?
Yes.
So I have a very simple balance sheet. Eh? So this is a format. By the way, I know this is a simple balance sheet. Okay, you might think, oh no, this is not as per the standard. Or have you seen an income statement from Pastel? Has anyone seen the way an income statement from Pastel looks like? Or a balance sheet from Pastel looks like? It's
No.
it's the exact format. Okay, just that I'm logged out of Pastel right now, and if I start logging into the process, otherwise I wanted to log into Pastel so that you see one. But don't worry, since it's Pastel, Excel will get to experience all that, and you'll get to compare, and you'll see if there's actually a huge difference. But otherwise, Pastel also follows the exact same standard, and it's like this. And the way accounting is, we don't make financial statements for them to look nice. Okay, we don't make financial statements for them to look beautiful. The reason why we make financial statements is for them to assist in decision making. Okay, for them to have information that management and all stakeholders need. Okay, for them to be easy to read. You get my point? So if we have this financial statement, it's just like this, black and white on a plain paper. Non-current assets, we have financial, we have inventory, we have total assets, liabilities and equity. We have equity here, we have liabilities, and then the total is 15,000 kwacha and 15,000 kwacha. Trust me, this is a very good balance sheet. And see, I've also noticed something about management, or they prefer something that is easy to read, not a complicated financial statement with a lot of complications, very detailed, showing you the breakdowns. You get it. They actually don't need all that. What they need is to just see something and make a decision, because they don't need to be calculating and wondering what this is, what that is. You get it. It has to be a simple thing: assets, liabilities, and equity. That's it. So this is a simple balance sheet. And we have only managed to make a simple balance sheet. Don't worry, we actually learn how to make more balance sheets, better balance sheets, income statements, cash flow statements. Although what I actually like the most is the cash flow movement system and the cash flow budget for like 3 years, or the cash flow forecasting, that I like, because that's very, very important. And if you were to make sure you have that skill, you can do forecasting, you can make your budget properly. Trust me, you can see the future. Okay, the future might be slightly different because of variances. That's why we also have variance analysis. We'll get to learn variance analysis as well to see how we can compare our budgets, our forecasts, and everything. But at least you can see a part of the future. You can estimate it and know how much you can sell. Like, for instance, you can predict how much your total sales can be in December. That's forecasting. And we need to have that skill. And it's part of this package. Okay, so we've used the accounting equation, understanding financial elements, and a bit of some Excel skills for us to make this simple spreadsheet, a simple balance sheet. But imagine if there was a way you don't need to type this 10,000, or you don't need to type this 4,000, you don't need to type this 8,000. Imagine if there was a way you can just input information somewhere and it will automatically get it and bring it here as your inventory. Don't you think that can make work way easier? What do you think?
It would make work much easier.
Yes, and trust me, there is a way. There's always a way. Let me use this example. I'll use this spreadsheet that I made as an example, because I actually made this one already. Uh, let's see. Cash flow. These are just made up figures. Okay. All right, so these are just made up figures. Okay, so you've seen we have a dashboard, total revenues, to the expenses, and then we have a cash flow. We have a cash flow statement. Uh, okay, we have in our cash flow statement, I don't have cash in hand. Imagine if I had cash in hand, I put 5,000 kwacha here, and at the bank I have 10,000 kwacha. So it will automatically change my total estimated. This is the most important figure. My total estimated balance will be, after I get all my credit sales and I make all my credit purchases, will be 16,600. But I will know my closing cash balance. So basically, I can use this for bank reconciliation purposes. Okay. And also, the other example that I can give you is, let's say for instance, if we talk about monthly credit sales. If I were to say, like, let's say for instance, just randomly, this is just a random example. I know I probably gave this example already, but I just want to show you how Excel can auto calculate or basically get information. You can basically make information data, and you can basically make an Excel spreadsheet that will only need data entry for you to actually do your work. Like for instance, today is the 6th. On the 6th of April, 2025, we have a supplier. I pick a supplier. Let's say I get Airtel Zambia, or let me get ShopRite because I want to buy something else. I decide to buy the due date. Firstly, the due date of whatever I've bought. Whatever I've bought is on credit, and the due date is, let's say, the 5th of May 25, and the description of what I've gotten is foodstuffs, because we have a canteen, so it's foodstuffs for employees. The amount that I've paid is 500 kwacha, but I still owe them 1,500. So basically the total is 2,000. So here I just have to pick partially, let's say I say partially paid. By the way, this information is coming from our configurations, okay? So I'm just putting configurations here, and I'm able to pick this. The Excel is getting the list from the configuration that I put. Okay, so imagine this. My credit sale, my total sale is 2,000, right? If I go to my income statement, if I go to the far end, I can go to the dashboard, and I can go to the income statement. And my credit sales here is actually 300. Okay. Because it was a credit purchase. Okay. Let me do the credit sales, because I want to show you something on the credit sales. Okay, let me just make another example on the credit sales, because I want to show you something on the credit sales. So let's say it's a credit sale. I sell something, and let's see. The paid amount is, let's say I put 300 or 3,000, and the outstanding amount is 5,000. So the total is 8,000. And then if I put, let's say I put fully paid or partially paid, or if I want, I can remove this. Let me just remove this, and then I leave that, and then I say fully outstanding, and then I go to my income statement. It will have you seen how the credit sales amount has increased? From, it was about 3,300, but now it's 5,300. And then if I say it's a bad debt because someone decided not to pay, it will also recognize it as an expense. Okay, it will remove that 5,300 as an expense. You see, but if I change it again, if I say fully outstanding, it's it's not recognizing it as a bad debt anymore. The only bad debt is the other parts that I put up as bad debt. Okay. Otherwise, basically, what I'm trying to show you now is that you can make Excel just automatically get data from you from another sheet to actually put in another sheet. Like an example can be, if we check through our this same spreadsheet, inventory is basically your stock. Imagine you do inventory valuation here. You have a spreadsheet that does inventory valuation here. Do you think this can help you in monitoring your inventory figure? Because your inventory amount that you have here is your closing inventory, okay? The stock that you have. So if you have an inventory monitoring system here via Excel, you have an inventory spreadsheet, an inventory monitoring system. Do you think that can automatically change your inventory value when you sell inventory? What do you think? Hello. Imagine you have an inventory monitoring system. We can create systems. Systems aren't a problem. We have an inventory monitoring system which tracks the inventory that we get, the cost of the inventory that we acquire or we purchase. That's opening purchases, just the same we do with our cost of sales. And then it removes the inventory that we have sold. Do you think that can automatically help us track our inventory? Because it will definitely show us the total inventory that we are remaining with. And if we link that total figure to this balance sheet, do you think it's possible to automatically create a balance sheet for you by just doing data entry? Do you think that's possible?
Yes.
Yeah. And it will make your work way easier. Okay, it will make your work way easier. We can have an access system, okay, an access register where we monitor our assets. We monitor the depreciation. If it's some complicated business, it's some large scale business, and you also account for depreciation, we'll monitor the depreciation as well. Okay, we'll monitor the depreciation. We'll have an access register, access system to monitor the assets, and then we'll only bring in our net book values. We'll link the sheets. And it's very easy for you. You might be thinking, oh, I'll have to go from one sheet to the next. It's a lot of work. So I have to scroll through, look for something. But do you see how I am going from one sheet to another? It's very easy. I have a summary here. Have you seen my summary? I just click credit sales and I go to the credit sales. Okay? I just have to link those sheets. And you can also link these sheets, not just to themselves, to other sheets. You can have a sales report, a separate sales report. You link it to here. You connect the two sheets with formulas. It's very much possible. And the icing on the cake is if you want, you can do all this online. Meaning you, even if your computer crashes, you won't lose your data. Have you seen how important and beneficial Excel can be?
Yeah, yeah.
Yes. So basically that's how it's going to be. That's how it is. So there's something that I want to do. Okay? There's something that I want you to do. Um, Let me ask you a question. Who is willing to have a practice today? Like I'll just ask you to do something and you try to make a simple spreadsheet. No, not a balance sheet, just a simple spreadsheet. Like it can be, you know, let's say a simple cash book, like for instance, the way this cash book is, a simple cash book, okay? A simple cash book. Let's say you have this cash book, date, description, category, receipts, payment method. Don't include the data validation. We'll learn all that later. That's not a problem, okay? Here I was doing data validation. That's the reason why it's getting all this. I'm getting all this from my configurations. I put up a system, setting systems. We'll learn all this later. But just a simple spreadsheet. Date, description, account, debit amount, the credit amount, and then you come up with some transactions. Imagine you're running a business and you have a number of transactions. You're like, okay, there's this transaction, it's a debit. There's this transaction, it's a credit. There's this transaction, it's this. There's this transaction, it's this. And then you have the total debits and you have the total credits. Who is willing to actually do that exercise? And then you just send through. I can give you my email address and then you send it through to me tomorrow. Who is willing to just do that simple exercise?
Sounds like a done deal.
Okay. Is
Not
everyone
see.
okay? Everyone is willing to do that simple exercise. Okay. So what I'm going to do is, I'll share this plan in the group. Okay. This was just an introduction. I'll share this plan in your group. Okay. We've created our first accounting spreadsheet, and we've done let's say our accounting is essential. We've done this. Assets and liabilities, we've done this. We've even made a balance sheet, a simple balance sheet. First accounting spreadsheet, that's the same one. Record capital, income, and expense transactions. We haven't done this. That's the live practice. We have to do this. We do the live practice, start with the live practice, and then afterwards we go to the charts in our next session. So I'll have to share the timetable, and afterwards I'll share this because this is practically what we'll be following. Okay, so you have to cruise through and see what we'll be doing in all the sessions that we'll be having. Okay, everything is already predetermined, everything is already planned, the arrangements have been made, everything is ready, and this is what we are going to look at. Okay, so I'll share this in the group. I know there are two groups. I'll share in the conference forum group, and I'll also share in the other group. Otherwise, This is the introduction. Okay. Now I have a question. How was the introduction? And do you think these lessons were a good idea and they'll be very beneficial to you as an accountant or as a business owner?
Yes, Mr. Ronald.
Yes, sir.
Yeah, it is actually a very brilliant idea, and also the introduction has been so powerful in a way that at the end of the day, I believe each one of us is learning something, especially the practical of doing our work and carrying out our duties as accountants in different firms. So yeah, to me, it's a welcome and it's a good move that you're doing.
Okay, and the other plus, this actually comes with yeah, actually you probably have it on your computer. So this actually comes with a pastel, which I can share with you. Like I mentioned, I'll have to send it to you. I'll send you the installation files. But I must mention this particular pastel is a slightly older version of pastel. So it will work on a slightly older operating system as well. You get my point, Mr. Knox?
Oh yeah,
So
yeah.
yeah, so that's how it is. So if you get it and you have a very recent operating system, it might give you a bit of some challenges. Okay, just sort of mentioning that. Okay, and also the other thing that it comes with a service whereby if someone registers every single time, like for instance, Mr. Knox, you need to work on a spreadsheet, it's work related or it's business related, and you need help. There's a 24/7 service where I will actually help. You can send me the details and I'll be able to assist you with that. We just want to ensure that everything is done properly, not just with the lessons, but also in your practice. Okay.
Okay. Yes.
Yes. So there's also that, which I actually believe is a plus because we have to make sure that everything is done accordingly, everything is done practically. So this doesn't just include Excel, it talks about Excel, Pastel, we'll talk about the taxes, we'll talk about statutes, the NAPSAs, the NEMA, the ZRIs, everything you need to know. And then we'll talk about company setups approach. And then we'll have a conclusion where we'll talk about the final reports. Okay, the final reports presentation. Like for instance, you need to do a PowerPoint presentation, how to you make your presentations, how to make everything. If you want to do, imagine you want to do a PowerPoint presentation as an accountant in a boardroom for directors, how you are supposed to do it, how you're supposed to make it. And we even have assignments where we need to do a bit of some presentations, like you need to share your screen, you make a presentation. Imagine we are the board, we are the directors, so as to ensure that you are 100% comfortable with presenting, with the way you are communicating, and with the way you are actually making your Excel spreadsheets, your charts, and everything else that you need to make a proper presentation. Okay. All right. Do you have any questions?
No.
Okay, so I'll share this and the timetable. The timetable I might share it in the morning, but this I'll share it now. Otherwise, I would like to thank everyone who joined our first session. You took time to join. Thank you very much. Hoping to see you in our next session. For today, we'll end here. Thank you very, very much.
Thank you.
Thank you.
Yeah.